Hello, this is Rich Dad. Bitcoin has reached 5K and shown some price recovery, but we are still thirsty for more, aren't we? Today, we'll cover 4 key topics. First, the new Bitcoin product being launched by the CME Group. Second, insights from the famous US financial expert Susie Orman. Third, why Ethereum's price has been struggling despite the launch of a spot ETF and whether it has the potential to rise. Lastly, we'll take a look at on-chain data to assess Bitcoin's outlook. I've organized the video around 4 main topics. I hope this will help you with your investments during these challenging times. Let's get started. The CME Group is introducing a new Bitcoin futures contract called the Friday Bitcoin Futures. According to the article, the Bitcoin Friday Futures contract was created to attract small-scale investors. The BFF contract is priced at 1/50th of a Bitcoin's price, and since it is settled in cash, it does not require actual cryptocurrency transactions. To summarize, if the BFF, Bitcoin Friday Futures, is approved, it could have 3 positive effects. First, liquidity will increase. Since BFF allows trading in smaller units, more small-scale investors will be able to participate in Bitcoin, boosting market liquidity. Second, it helps manage price volatility more effectively. As this product expires every Friday, investors will find it easier to manage price volatility over the weekend, helping to reduce risk. Third, it could expand institutional investor participation. Thanks to CME's credibility and regulatory compliance, more institutional investors may take an interest in Bitcoin. This could stimulate demand for Bitcoin and potentially have a positive impact on its value in the long term. According to a Cointelegraph article, best-selling author and host of the Women and Money podcast, Susie Orman, said, "As young people make more money and become more successful, Bitcoin will become one of the investments they choose, and as a result, its value will rise." Susie Orman is a highly renowned financial expert, best-selling author, TV host, and podcast host in the United States. She has published dozens of investment-related books to date. She primarily emphasizes personal financial management, especially women's financial independence, and has gained great popularity by hosting the podcast Women and Money. She began her career as a financial expert early on and has been advocating the importance of financial freedom and financial planning to many people. She believes that it is crucial for women to achieve financial independence and offers various financial management methods and investment strategies to support this. Therefore, I think it is worth paying attention to Susie Orman's statements. In fact, if we look at the increasing number of cryptocurrency investors since 2016, it has been continuously rising without a single decline. According to this data, it's more likely that the number of cryptocurrency investors will continue to grow rather than decrease. If that's the case, as Suze Orman mentioned, the growing demand could lead to an increase in Bitcoin's price, making it more likely to rise further. Additionally, there is data predicting that 10% of regular companies, excluding giants like BlackRock or MicroStrategy, will convert 1.5% of their reserves into Bitcoin over the next 18 months. Currently, US companies hold 683,000 BTC, and it's projected that this number could increase to as much as 943,000 BTC by 2026. As of the end of 2023, the total market capitalization of US publicly listed companies is valued at $5 trillion. Among these, it is predicted that 10% of the companies will convert 1.5% of their treasury reserves into Bitcoin. Corporate reserves are funds set aside to ensure that a company can continue operations without disruption in case of unexpected expenses or unforeseen crises. Depending on the situation, these reserves can also be used to quickly respond to important opportunities such as business expansion or mergers and acquisitions. Additionally, during times of economic uncertainty or a recession, corporate reserves play a critical role in maintaining the stability of the company. Converting even a small portion, such as 1.5%, of such an important reserve into Bitcoin may not happen immediately, but it suggests the possibility that Bitcoin could one day establish itself as a safe haven asset, similar to gold. This movement could encourage more companies to adopt Bitcoin, further increasing trust in the cryptocurrency. It could serve as a catalyst to enhance Bitcoin's credibility even further. I haven't talked much about Ethereum lately, but today I'd like to dive into it. Since the launch of the spot ETF, Ethereum's price performance has been quite underwhelming. Let's discuss why that might be and whether Ethereum's price could rise in the future. One of the major US investment management firms, VanEck, recently announced the closure of its Ethereum Futures ETF. It seems they made this decision due to the poor performance of the Ethereum Futures ETF, especially after the launch of the spot Ethereum ETF. This likely played a part in Ethereum's recent price weakness as well. On-chain data also shows that on August 5th, during Black Monday, the amount of Ethereum being deposited into exchanges reached its highest level this year. This influx contributed to the further decline in Ethereum's price. At the same time, the increase in Ethereum's exchange reserves seems to be contributing to selling pressure. Recently, the net outflow of Ethereum from derivatives exchanges exceeded 40,000. The fact that Ethereum is being withdrawn from derivatives exchanges could mean that selling pressure is decreasing or that borrowing Ethereum for new short positions is declining. It seems that the closure of VanEck's futures ETF has reduced the appeal of Ethereum derivatives, which could explain this trend. As a result, if volatility decreases, when Ethereum eventually rises, the downward volatility might be less pronounced compared to before. With Ethereum Spot ETF already approved, but its performance still underwhelming, it's understandable that those holding Ethereum may be feeling a lot of concern. The lack of strong price movement despite such a significant milestone could naturally lead to worries among investors. To get straight to the point, even though Ethereum's performance has been underwhelming and it's not showing strong results right now, I believe that it will inevitably move upward in the long term. Now let me explain the reasons behind this. If Bitcoin was designed with the purpose of being a store of value and a digital currency, Ethereum, on the other hand, stands out by enabling the practical use and application of blockchain technology. This is a key difference between the two. One of the hottest coin trends recently is RWA, which stands for real-world assets. RWA refers to the process of tokenizing real-world assets by bringing them onto the blockchain. This includes physical and intangible assets that are typically less accessible, such as real estate, artwork, government bonds, and intellectual property. The concept is similar to security token offerings, where blockchain technology is used to link tokens to real-world assets. According to projections by the Boston Consulting Group, the RWA market is expected to grow to a staggering $16 trillion by 2030. This means that real-world assets could increasingly become part of broader financial activities through blockchain, indicating the massive potential scale of this market. The reason for this is that converting real-world assets into digital assets offers numerous advantages from economic, technical, and operational perspectives. As blockchain technology continues to evolve, tokenization of real-world assets can significantly improve asset management, trading, and accessibility. This process is gaining more attention due to its potential to transform how assets are handled. For example, traditional assets like real estate, gold, and artwork are considered illiquid assets. By converting these assets into digital form, they become easier to trade, thereby increasing liquidity. Simply put, when real-world assets are tokenized on the blockchain, fractional ownership and smaller transactions become possible, allowing more people to participate in ownership or trading. For instance, a piece of real estate valued at approximately 100,000 USD could be divided into smaller units, enabling many people to own or trade fractions of that property. And it also improves transaction efficiency and reduces costs. Traditional asset transactions often require intermediaries such as brokers, lawyers, and banks, which can take up a lot of time and money. By digitizing assets, smart contracts enable automated transactions, reducing intermediary costs and streamlining the transaction process. For example, in real estate transactions, using blockchain-based smart contracts automates the transfer of ownership and payment processes. This reduces the need for complex legal procedures and paperwork while also lowering transaction costs. Blockchain provides a transparent system where transaction records cannot be altered and anyone can verify them. When real-world assets are converted into digital assets, ownership, transaction history, and price changes can be tracked in real time on the blockchain. This helps prevent ownership disputes and curbs corruption or fraud. Additionally, thanks to the security of blockchain, information related to asset ownership can be managed safely. Additionally, as accessibility to asset markets improves, it can expand globally. This allows for easier investment in assets outside of one's own country, and asset holders can expose their assets to a broader market, maximizing their asset value. Moreover, when real-world assets are tokenized into digital assets, they can be used as collateral or provide liquidity within the DeFi ecosystem. For instance, after converting real estate into digital assets, one could use it as collateral to obtain loans or stake it on DeFi platforms. To summarize, tokenizing real-world assets increases liquidity, improves transaction efficiency, and provides advantages like transparency, security, and global market accessibility. This fundamentally transforms the way assets are managed and traded. As Ethereum has already established itself as a key platform in decentralized finance, it plays a crucial role in managing and trading real-world assets on the blockchain. BlackRock, the world's largest asset manager with $13 quadrillion under management, launched a new financial product this year called the Poised Fund, based on Ethereum. This fund allows traditional assets to be tokenized and traded on the blockchain. The Poised Fund was specifically created to digitize BlackRock's vast portfolio of real-world real-world assets. Within just a week of its launch, a massive amount of real assets were tokenized through the Poised fund. BlackRock is already in the process of digitizing the enormous traditional assets they manage, and the foundation for this is Ethereum. This information is quoted from a brief explanation about Ethereum on BlackRock's website. Ethereum is the second largest cryptocurrency by market cap and a flexible technology platform supporting applications or programs that can run without a centralized intermediary. This includes payments, but also a wide array of other applications, like decentralized financial services and tokenized assets. Think of it as an open source app store that anyone can build on. BlackRock is one of the top asset management firms in the world when it comes to risk management. The fact that BlackRock has chosen Ethereum speaks volumes, and it could be said that there's little left for us to debate about Ethereum's credibility. Even though BlackRock can't immediately digitize all of its real-world assets, which are worth over $10 trillion, I believe they will gradually continue to tokenize these assets over time. As I mentioned earlier, by doing so, BlackRock will be able to manage their assets much more efficiently, so they will likely continue working on the process of digitizing real-world assets step by step. In addition to BlackRock, other institutions like Franklin Templeton, JP Morgan, and Sygnum Bank, which I covered in a previous video, are also working on tokenizing real-world assets using Ethereum. I believe this trend will continue to expand, and this growing movement could lead to increased demand for Ethereum. As demand rises, it's only natural to expect the potential for Ethereum's price to increase as well. If we look at the actual data, the amount of real-world assets being tokenized into digital assets is continuously increasing at a steep rate. On the left, you can see private credit, US Treasury debt, commodities, non-US government debt, corporate bonds, and stocks. Judging by the speed of this increase, it's clear that the growth is quite rapid. They plan to reach $15.2 trillion by 2030, so it's expected to grow even more significantly in the future. In this table, you can see that Ethereum is the most widely used network in the process of digitizing real-world assets. When compared to Solana, Ethereum's usage is more than 20 times higher. Here's the weekly Ethereum chart. During the 2017 bull market, it dropped by 94%, but within about 2 years, it surged nearly 4,800%. Think about how many people who accumulated during this period grew tired, gave up, or stopped out of their positions. However, for those who endured this time, a much greater reward followed. Keep this in mind, and I hope you stay strong through challenging times. Currently, Ethereum is forming a massive triangular consolidation pattern. If it breaks out to the upside, I believe this could trigger a significant rally. Now let's wrap things up by taking a look at the on-chain data for Bitcoin. This on-chain data chart shows both the RSI and Bitcoin together. The RSI is set to a 14-day period, and since Bitcoin hit its bottom in 2023, this level has only been touched twice. When Bitcoin touched this level in the past, it was followed by significant upward movements shortly after. Now that it's touched again, while we may need some time as the bottom is not fully formed yet, I believe a shift towards an upward trend could be imminent. This chart shows how long-term holders have been accumulating Bitcoin. In 2024, Bitcoin is being accumulated more strongly than at any other time. We can interpret this as a sign that an immense amount of energy is being built up, which will likely lead to an explosive breakout after the accumulation phase. This data comes from the well-known trader Crypto Rover. It compares the price performance of Bitcoin after each halving event in one chart. When we look at the past performance following previous halvings and compare it to the current situation, we can see that while this halving cycle has started from a relatively higher point, it suggests that the real upward movement hasn't even begun yet. Currently, Bitcoin still has a long way to go. We've only come this far. In terms of price, it might seem like we've made significant progress, but I believe Bitcoin is just getting started. September is already heading towards the middle, and I think the time when you wake up and see your account growing every day is not far off. Here's a summary. The famous US financial expert Suze Orman said that as a new generation enters the market, Bitcoin will continue to grow. While Ethereum's performance is still underwhelming, I believe its value will keep rising, as it plays a crucial role in merging cryptocurrency with the real economy. Bitcoin's price still has a long way to go. Thinking about the healthy balance you'll have after the bull market, I hope you can wait with a positive mindset during the remaining time. The legendary investor and investment philosopher Benjamin Graham, who is known as the father of value investing, once said, "A wise investor buys stocks from pessimists and sells them to optimists." The current market is a pessimistic one, filled with investor fear. Will you be the pessimist who lets a wise investor take your shares, or will you be the wise investor who sells to the optimist? If you found today's video helpful, please subscribe, like, and leave a comment. Thank you.